There are so many things to think about right now, and those are nothing compared to what's lurking in the distance, threatening to disrupt our peaceful lives. The world's breadbasket, one of Europe's main energy sources, at risk of total collapse. At first it seemed like Russia and Ukraine were small enough that if they fell, the world would be fine. But already strained supply chains and energy demands have proven how delicate of a balance our world is actually in. We're a global economy reliant on one another. So I decided I really need to figure out what's going on with the economy of Russia and how will this impact Europe, the United States, and the rest of the world. So starting off straight away, this is difficult. With misinformation everywhere, it's hard to be sure what's what, so I need to do my best to verify information if I wanted to find real answers. But there's one thing for certain. Russia doesn't even need to collapse for this war to mess up pretty much everything for everyone. In order to understand any of this, we need context. Tens of thousands of casualties. Entire Ukrainian cities turned to rubble. The country's economic output is expected to shrink 40% this year. Imagine what would happen if you and everyone you know saw their income slashed by nearly half. That's literally what's happening in Ukraine. And this bad news crosses borders. If you love bread, you're gonna hate this. Sounds like a BuzzFeed article, but many countries depend on Ukraine and Russia for food imports, especially wheat. Not to mention the fact that fertilizer costs are skyrocketing as well. Why? Because Russia's a major exporter of the stuff that makes fertilizer. It's a vicious cycle that means
the price of staple foods has soared in recent months.
Unrest is breaking out. One government has even collapsed.
Sri Lanka's economic crisis is boiling over. Hundreds of people broke into the presidential palace.
And this isn't just a problem for developing countries. Everyone in the world will feel this. US food inflation is above 10%. And remember when gas hit $6 a gallon this summer? Well, that's not all Russia, but the panic and speculation since the invasion hasn't helped. And this isn't the end of it. The financial system could get hit next. Right now, Europe's energy utility companies need to come up with an enormous amount of cash. And if they don't pony up, it could be another Lehman event for the global economy, a financial collapse sending shockwaves around the world. One estimate says these utility companies need $1.5 trillion. If they don't pay, it could affect investors everywhere. And as a result, European governments are working on bailouts for these utilities. We don't know if it'll work, but it means Europe will take on even more debt after already piling up during the pandemic. So it's no wonder that the euro is falling. Now, I couldn't stop thinking about the energy issues. Energy's at the heart of literally everything we do. We need it to manufacture, ship goods. What about your nyctophobia? Europe depends on Russia for 29% of its oil and 40% of the natural gas for electricity. And you might be wondering why they relied so heavily on Russia. After all, Russia's always kind of been like that angsty kid in the back of the classroom, shooting spitballs and carving his name into the desk. But back in the day, it actually seemed smart for Europe to get its energy from Russia. Russia looks safer than the alternatives. So now Europe's in this weird spot. It needs Russian energy, but doesn't want to fund Putin. So it's trying to wean itself off of Mother Russia. There's this impossible scramble to find new sources of energy. And the deadline, December 5th. That's the last day Russian oil flows to Europe before sanctions are put in place, and it's not going to be easy. The entire infrastructure Europe built for energy in the last 30 years was created around Russian oil and gas. It's where the pipelines go. Bringing oil and gas from other places will be slow, expensive, and take years to make the switch. And you can bet these pressures will be felt all around the world. And in the meantime, businesses large and small are being forced to shut down. In Germany, factories are closing because of power bills that are at least 5 times higher than they were a year ago. This has meant restarting smelly, carbon-heavy coal plants. And it's not just Germany that's getting desperate. In England, pub owners are posting outrageous electricity bills.
This site here in North London, our electricity loan's gone from £16,000 a year to £65,000 a year.
On the bright side though, Italian cafes are looking quite romantic. But winter's coming, and officials are warning of power shortages as the temperature drops. Germans are stockpiling firewood. In Poland, they're lining up for coal. So with all that going on, it might be disappointing or even infuriating to hear that Russia isn't doing much worse. Go back to the early weeks of the invasion. It looked like Russia was plunging into a total dark age, that Putin had screwed up. He underestimated Ukraine's ability to resist. Within weeks of the invasion, the US and its allies cut Russia off from SWIFT, which meant that Russia's people and businesses were cut off from global banking. Totally simple things like withdrawing money from a Russian bank account in a candlelit bank in Italy became impossible. Western businesses began abandoning the country. McDonald's, who arrived in Russia after the Soviet Union fell, has now left, alongside hundreds of other businesses. 12% of all jobs in Russia were at multinational firms. And there's secondary effects to this as well, because Russian businesses have been cut off from their suppliers. Airlines can't do proper maintenance. Factories can't get replacement parts. Bit by bit, Russia's industries are grinding to a halt. But you wouldn't know that from listening to Russian officials. As far as they're concerned, Russia is winning and Western countries are screwed. But privately, they're saying something very different. A secret Russian government report shows they expect the economy to shrink by up to 11% this year. But here's the thing. In some ways, Russia's economy is doing better than expected. Oil and gas revenue is up 35% from last year. The Russian ruble plunged when Putin invaded Ukraine, but now it's trading higher than before the war, and Russia's working on ways to get around those sanctions. In a pretty wild move, Putin removed patent protections from Western companies. This means they're knocking off versions of McDonald's, Starbucks, and virtually every Western brand. And these companies can't do anything about it.
I know a genuine Panaphonics when I see it. And look, there's Magnetbox and Sorny.
But maybe the most important thing that's happening is Russia's finding friends. The biggest of them is China. Maybe. China seems to be playing both sides in this conflict. On the one hand, many Chinese businesses are following US sanctions, bailing on Russia. But on the other hand, China is signing new contracts for oil and gas with Russia. In fact, China has nearly doubled purchases of Russian oil. And these deals aren't in US dollars. They're in Russian rubles and the Chinese yuan. Xi Jinping and Vladimir Putin want to end the US dollar status as the global reserve currency. And they're using this crisis as an opportunity to push that forward. And how could we forget? Russia and China are holding a series of joint military exercises as well. That's a pretty huge move in the middle of China's standoff with America over Taiwan, and it's causing people to worry about open conflict breaking out. This would mean 2 wars on 2 continents. Again, bad for literally everyone. Meanwhile, Iran just signed a $40 billion deal with Russia, and apparently Russia's buying drones from them as well, and artillery from North Korea. So is this a sign of new alliances or desperation by Russia? It's really hard to say. But they seem to be making more and more friends. Like India, they just signed a deal to buy discounted oil from Russia. This didn't get much attention in Western media, but it's a big deal. They're the 6th largest economy in the world. Now, of course, buying oil doesn't mean India is actually allying itself with Russia. Back in the Cold War, India was non-aligned. It did business with both the US and the Soviet Union. So maybe it wants to play the same role again. This whole thing is starting to feel like a nasty divorce. Maybe it started by snipping at each other across the dinner table, but it's jumped right into destroying each other's stuff in front of the neighbors. December 5th may be the official divorce date, but Europe and Russia could be in big trouble way before then, which means everyone will be in trouble. We've never before seen a whole continent suddenly lose a third of its energy. But here's the thing. In the long run, when this messy divorce is over, there could be some real good to come out of this. You know that old saying, necessity is the mother of invention? Well, Europe is facing the necessity of some serious invention right now. It may come out of this the world leader in renewable energy. Brussels is working on a 210 billion euro plan to speed up their already ambitious green energy targets. High gas prices slamming households across the world are the single best argument for developing more sources of energy. So the coming winter will be a test of just how resilient our global economy really is. And let me be honest, we probably won't be impressed by the initial results, but this could lead to a more resilient world, as long as we don't blow ourselves up first.